Hello, everyone, and welcome to the Big Show. This is the Big Show, the investing and trading live show here today on the radio airwaves. And I have my good friend, my good pal here today, Mr. Al Connickson. Al, how are you doing today?
Feeling pretty good today, Josh. How about you?
I'm doing really good. As you know, my name is Josh Lilquist, and we are going to have a good show for you here today. We have some major moves in the stock market this week. 3M showing a surge on Tuesday. Salesforce, which is CRM, showing a surge on Tuesday, but Wednesday, wow, you've seen a nice gap up on really the whole. It's hard to find a stock that did not gap up on Wednesday. So showing some strength on in the market here this week, especially at the beginning of the week. We know what happened at the rest of the week here, and we had CPI data on Wednesday,
Right.
lower than expectations. So that potentially is why the market surged on Wednesday. So there's moves in the markets, and that's what we're going to talk about here on the show here today is how to take advantage of these moves, whether it's going up or down, but also have strategies for those sideways markets for your income accounts and those wealth accounts, which would be 401ks and IRAs, and our sponsor, Online Trading Academy, 26 years teaching people just like you how to do just that, how to make smart investing decisions for your financial future, for not just for you, but for you and your family. So, Al, with these big moves that we've been seeing, the S&P 500 currently at, as the show here today, 446.44, in that supply zone we've been talking about for a couple weeks here. And we talked about on the show here the past few weeks, if this continues to go range bound between that supply zone and the demand zone, where could this market go? So, with that being said, Al, with the CPI data and other stocks surging, especially Wednesday, what's your take on the market?
Well, we've got two catalysts this week. One is the inflation data, the CPI, and then also earnings starts in earnest on Friday with the bank stocks. And what happened on Wednesday, the CPI number came out good. It was only up 0.2%. The estimate was for an increase of 0.3%. But the core CPI, which is really important, that excludes energy and food, that was up only 0.2%. So it looks like what the Fed has been doing has been having some impact. So that's one of the things that's going to impact the market. Now, we're recording this show before the PPI came out, so that'll be an important number. That really is indicative of what's coming down the road as far as prices. And then also the PCE, the personal consumption expenditure, the Fed's going to be looking at that. But it looks like, even though it looks like inflation has come down, the Fed will probably still raise rates because they're still a little unsure. Wages still are increasing and not doing what the Fed has been intending for them to do, which is to go down and for unemployment to go up. Earnings are coming out again. And what we found is that even though inflation has been coming down, it was a high of over 9% for a while, and even though inflation has been coming down, the prices that people are paying for things haven't necessarily, and you can't count on that. Once prices increase, it's really difficult for them to come back down. Some will, but if you look at energy costs are still up 20%, mortgages up 40%. But here's the interesting thing, Josh. Earnings are coming out, and what we're hearing, and this is one of the problems that impacts people's ability to be successful, is they listen to the news. They listen to what the pundits are saying and what the analysts are saying. They have been calling for an earnings recession for some time. They called for it last quarter. Didn't happen. Now what's happening with the cost of living still high for people, the PPI last month was low, which means that the cost for producing these goods and services was low, but the inflation still was impacting people. What that means is that the companies could actually be increasing their earnings. So even though the analysts are calling for a potential earnings, negative response this quarter, that may not happen. We may be surprised on the earnings environment.
Yeah, well, we think about it. Companies, they're not going to just lower their prices just because if they're making a bunch of money. I mean, we could see this continue to keep going up. I mean, who knows?
Yeah, especially with things that are important. It gets down to supply and demand,
And
which
food is what's really hurting people.
food is what is hurting people. As I mentioned, energy costs. I mean, there's so many things.
Yeah.
You talk about food. One of the things that I really looked forward to this summer, there is a watermelon called the Black Diamond watermelon.
Hmm.
If you've never had one, you have to get one. If you like watermelon, it's like watermelon on steroids. Last year, I was buying them for $8. This year, I saw one at a fruit stand. It was $14. That's a huge increase in the
Hmm.
cost of something like that.
Yeah, we were talking the other night. I don't get a lot of groceries just because I don't like to go grocery shopping.
But you like to eat.
I like to eat, but there was these rice packets I used to buy, and they were 89 cents. I bought them the other day. They were 280 no 389
Yeah.
for those same rice packets.
It's huge.
And it tasted the same.
Yeah. Well, you know what? And the other thing is that you may even pay the same price for something, but the quantity is not there. That's
called
that shrinkflation.
Yep.
Exactly.
You see that a lot with candy bars and stuff like that.
Bags of chips, things
Yep.
like that. Yeah. But the point I'm making is that you're going to get all sorts of news, all sorts of information. What's going to happen with the impact of the lower CPI? Market's probably going to react in a positive way, depending on the PPI. The same thing. But the markets and assets always kind of seek a normal valuation. So you may react to certain situations. You may react to news based on what you think should happen. But Josh mentioned something a little while ago that's really important. He mentioned the supply zone. There are areas on a price chart that we teach our students how to read that show you where buying and selling activity by the big institutions is. You could have the best company in the world with the best product ever created, but if nobody buys the stock of that company, the price isn't going to go anywhere.
Yeah, I'm glad you brought that up, Al, because that's where we do make our financial decisions. It's off a price chart. And as you were talking about earlier with people looking at the news and all these, I think you quote unquote call them pundits, they're talking about what's happening. It's creating emotions in the markets. And really that drives a few things. But what does drive price is supply and demand, as you
Right.
just alluded to. And how we make our decisions is on a price chart. That does not lie. That is not an opinion. That is factual. And we show you how that works, how we illustrate that for you in these investing classes that we do here locally. That way you can make smart investing decisions based off facts, not opinions. Just text the word investing to the number 210 for 2 seats for an investing class. Here locally at the Academy, we have a state-of-the-art facility, several classrooms where we teach people just like you how to get in the markets, how to do that safely and confidently. So just text the word investing to the number 210 for 2 seats for this class. When you do that, you're going to receive a text back, and it'll say, "Welcome to Investing and Trading Live." That way you can get into a class that makes the most sense for you. It'll have our landing page. You got to click the link to get into that page. So coming up next, Al, I want to talk about, you mentioned the prices of everything are still high, regardless of what anybody says, how we can combat that with some income strategies with the financial markets. This is Josh and Al. We will be right